All right, I'll put recording on now. So we're going to go to share screen. And so here is just a real simple example, and this is on Venko, of how you would set it up. And this is the setup that I am requiring. So you can see that I use 3 columns. In this third column, in the right-hand column, there should only ever be 4 numbers. Current, investments, plant, property, and equipment, and other. And then the total. So there should only ever be 5 numbers, your 4 categories, and the total. This is not debits and credits, okay? Think of a balance sheet as a piece of pretty paper with columns. They are not debits and credits. So look over here on your current asset. In the middle column is where we're putting most of our numbers. So cash and short-term investments goes there. This accounts receivable has to be shown at what it's really worth. And that's where that allowance comes in. You're taking the accounts receivable there, subtracting the allowance. That's what your accounts receivable is really worth. That's what you want to add into the balance sheet. Remember, yes, I get real picky about format because accounting is all about the format. If you take your financials into a bank, they expect them to look a certain way. If they have to hunt and peck for your numbers, chances are they're going to get frustrated and say, forget it. When they're looking at several businesses and they're looking at them side by side, in order to be able to compare them, they got to be in a current acceptable format. And that's why we're so picky. Accounting is about format. Okay. Here's your inventory, prepaid rent, typical current assets, and then that's the total of them. The other thing is you're going to see when we start to do ratios and stuff, having this all set up in this format is going to make doing your ratios so much easier because you can just go pull numbers off of here and do your ratios. All right, let's keep going. So investments, we only have 1. We've got a long-term investment in corporate securities. So I don't have to do a subtotal and carry it over here. If there's just the 1 number, I can just carry it over there. And then this one. This one, I get real picky about format. So sometimes your depreciation, your accumulated depreciation is given to you in a lump sum. The proper way to do it is the way that it's set up right here. Because that should say equipment. The proper way to do it is to show each asset at its true value. So we would want to break the depreciation out and put it against each asset. So here's the cost of your building. That's the depreciation to date on your building. This is what your building is worth. Now land goes out here automatically because remember, land does not get depreciated. And then we have our equipment. Cost minus the depreciation. This is what your equipment is actually worth. Then these numbers are added up to get this total. But again, this is so it shows exactly what everything is worth right here. The other common error with depreciation is because it has a credit balance, you put it on the liability side. Well, remember, liabilities are something that you owe. Who would you owe accumulated depreciation to? Okay, so this is the format. And then with this one, we have other assets. Again, we only have 1, so you can put it out here in the right-hand column and add those up, and that's what we get. All right, questions? Okay, then let's look on the liability side. So we have two categories: liabilities, current, and long-term. So we only have accounts payable. You can see on the liability side, we only had to use 2 columns. And this is what I was talking about with your notes. Here is the current portion of the notes payable. Here is the long-term portion of the notes payable. This is the principal part of what I have to pay in the next year. This is the principal part that's due after. And this is what I was talking about. For some reason, your book does not show this being done here, but you need to do it. I will take off for you for it. So on the liability side, you're going to have a total for your current, total for your long-term, and a total. You're going to see that if you have assets in every category, you're going to have 5 numbers in the right-hand column on the asset side. You're going to have 5 numbers in the right-hand column on the liability and equity side. This is a corporation, so it has common stock, it has retained earnings, that is your total stockholder equity. And then we're going to add the liabilities and the equity to get our total. And then we want to make sure that those two equal. Okay, questions? Does that refresh a little bit? Back to what it used to be or what it was. All right, let's, I was trying to find some problems here that we could do. So let's get your books out and turn to page 72 and 73. I'm going to put you to work a little bit. So we're going to look at problem number 7. And really it's just practicing with the types of accounts. So it lists a whole bunch of accounts there. What it wants to know is what is the total current assets and what are the total current liabilities. So get your books out, get your pencils out, get your calculators out, and tell me what current assets are and then current liabilities. Just do those 2 first. So I'll give you a few minutes to do that.
I'm sorry, what page was it?
72 and 73.
Okay.
Problem number 7.
What's the name of the company?
Happy Valley Hotel. So there's one account on there that you may not know what to do with, and that's that advanced deposits. So let's talk about that for a second. We talked about it a little bit with adjusting entries when we were talking about unearned and earned. So what that is when someone gives you a deposit, so say a deposit for an event, they have a certain period of time where they can get their money back. Until that period passes, it's a liability and it's a current liability. And I'm going to make the presumption that would be a current liability because of the time factor. So would it help if we went down through the list of accounts? And identify? Yes, no?
Yes.
Yeah.
Okay. All right. Accounts receivable, what is it?
Current asset.
Current asset, okay, accounts payable?
Current liability.
Yep, okay, now, accrued expenses,
Current liability.
good, yes. Okay, advanced deposits? What did we just say they were?
A liability.
Okay. All right, what about the allowance for doubtful accounts? Where's it gonna go?
Current asset to reduce from the accounts receivable.
Okay, good. It's gonna go with your current assets, but you're actually gonna subtract it off, okay? Beverage inventory,
Current asset.
Current asset.
okay? Cash, obviously,
Current asset.
okay. Current maturities of long-term debt,
That'd be long-term liability.
okay? So be careful, because it said the current portion, that makes it a current liability. The other part of it would be the long-term portion, which we don't have with this. Okay, so just watch for that word current. So that'll be a current liability. Food inventory,
Current asset.
okay, income tax payable. You think the government's gonna wait for their money?
No.
Current liability.
Yep. Prepaid insurance,
Current asset.
okay, notes payable,
Sorry,
Presume-
just going back on prepaid insurance. If there's no information as to how long the policy lasts, just assume it to be current.
yes.
Okay. Thank you.
Mm-hmm. Notes payable and notes receivable in this one, just presume they're both current. Okay, so notes payable would be what?
A liability.
Current liability, notes receivable,
A current asset.
okay, and then short-term investments.
Equity.
Short-term investments,
It would be a current asset.
current asset, yeah. Okay. So now add up your current assets, add up your current liabilities. See what you get. Everybody got numbers?
I got 243,000.
For current assets?
Yeah, problem 7.
Yep, that is correct. Anybody got a current liability?
I got 126,000.
Okay, that is also correct. So is everybody okay with those numbers?
Yeah.
The first one was 243,000.
243, yep.
Okay.
And then the current liability is 126. Okay, so we're gonna get bonus stuff today. So the third part of that problem asks you to find the working capital. Working capital is the difference between current assets and current liabilities. So all you have to do is subtract them to find your working capital. So if you take the 243 minus the 126, what do you get?
$117,000.
Okay, so that's working capital. So what that is that it looks at what the company expects to use up or convert to cash minus what they have to pay out in the next year. And then that's their money that they get to play with. So that would be what would they have to do extra stuff. And now you can see why we're so fussy about the format, because we could just go to the balance sheet, pull those two numbers off and subtract and have our working capital. So bonus number 2, starting on the ratios for chapter 5, is to do the current ratio. All you do, those same two numbers, is you now divide. And what do you want to be higher, your assets or your liabilities?
Your assets.
The assets. So they would go on top. So take your assets of 243, divide it by the 126. What do you get?
$1.928.
Okay. So what that means is that for every dollar that you owe in the next month, you have $1.93 to pay it off. So that's one of the ratios that we'll look at when we start doing the ratios in chapter 5. Okay. So I want you to go to, well, you're actually right on the same page, I think. On page 70, problem number 2. So let's look at that. Let's go down the list of accounts first. Identify where they should go. And then, yeah, we've got some time. We should be able to do it. We'll put together and page 70, and it's the daytime cafe. All right, first account is cash. And so when you're doing balance sheets, I suggest that you go down through the list, identify them first, because I can guarantee you when I give them to you, they're going to be in alphabetical order and not in any kind of a order as they were going to use them. So take the time out, go through, identify what they are, and then put together your balance sheet. Because otherwise you're going to get really frustrated if you forget something that goes in the very beginning. Okay, cash should be what?
Current asset.
Okay, prepaid insurance.
Current asset.
Okay, what about land?
Sorry, which problem are we on?
Number 2. It's on page 70. So land's gonna be what?
The property.
Okay, PP&E, yep. Accounts
uh,
payable,
Liability.
what kind?
Current.
Okay. What about accounts receivable?
Current asset.
Okay. Taxes payable,
Current liability.
okay. Mortgage payable long-term,
Long-term liability.
okay. All right, what about equipment?
An asset.
Okay, what kind?
Property, plant, equipment.
Okay, yep, PP&E. What about buildings?
PPE.
PP&E.
Okay. What about mortgage payable current? Okay, it's a liability, what kind?
Current.
Right, because it's that current portion of the mortgage. What about inventories?
A current asset.
Okay, wages payable.
Current liability.
Okay, so you'll notice that this is a sole proprietor and the capital account doesn't have an amount. Now, hopefully you don't do your books that way, but with this one, we're gonna do the whole thing. And then we're gonna have to figure out what the capital account is based on our other numbers. So I have to come back to that one. Where does your accumulated depreciation go?
Deducted from the
And your PP&E, right?
Yeah.
Okay. So get out your little pencils and papers and try to put this together into a balance sheet. I'll give you about 10 minutes and then we'll go over it. Okay. Don't be worried about writing everything out, abbreviate with this one so that you can get it done. But I'll put that other one back up so that you can see the format. Okay, so get started and I'll put the other one back up in 1 second. I want to go get something while you're working and then I will bring that one up so that you have something to look at.
Do you want the land and the building separated from the other assets?
So they should be under plant, property, and equipment in their own category.
Okay. Okay.
All right, let me. Share screen again. Put Benjamin back up. Okay, so there you have it so that you can see what the format looks like. So you would want to put your land and your building over here, like we did here. Now with that one, because they didn't split it out, you would just list your building, you would list your equipment, and then subtract the depreciation off the two of them together. And if you don't have a category, you don't have to put it on. Okay, so we're only got like 5 minutes left, so let me go back here. All right, so this is that problem. So you have all your current assets over here. We didn't have any allowance this time. Plant, property, and equipment. You have your land here. And because they only gave us one depreciation, we had to do it this way. But again, so this doesn't really show what each of these are worth. It just shows what the total is. That's why that other one is better. Didn't have any long-term investments, didn't have any other, so don't put them in. Over here, we have current liabilities. Total them up. We have our long-term total liabilities. To get this number, you would take this, subtract your liabilities, and that would give you that. This is on Venko. If you didn't get it finished, finish it, and then you can go check it.
Excuse me, row 10, cell A, should be prepaid insurance, not prepaid rent.
Okay. No, it's not gonna let me. Oh, that's my spreadsheet's protected. I'll fix it after. All right, questions. All right, let me get out of here. So what I want you to do for Friday is I'm going to give you a couple to look at, because remember, we're not spending a lot of time on this. So I advise you to practice these. And then you have a homework assignment that's due Friday night.
Yeah, Friday night.
Okay, and then okay, so this week, open today would be your 10-question quiz. And remember, when you do those, you have to answer the question before you go on to the next. You can't go back. They're purposely done that way. Again, it's based on reading the textbook. So no, there isn't time to look up the answers. The company and industry introduction part of your project is due Sunday night. Okay, again, that's a really small, pretty standard piece. You're really just looking up information on the company itself. That one's real short. And then we'll have an exam on Monday on the balance sheet during class time again. And the homework assignment that's due Friday night, I will get them graded first thing Saturday morning. And make sure you look at what I write, okay, so that you can correct it when you take the test. And then from here on out, we'll be spending a little more time on the topics because they're new and they're gonna take more work than what we've done so far. So what I want you to do for Friday, and then we'll go over them, is problem number problem number 13, which is giving you 2 years of information for balance sheets, and you're just putting it into format. And then problem number 11 is also just doing a balance sheet. Now, with number 11, it's a sole proprietor. What you have to do to find the capital balance is take what they give you On 1/1, his capital balance was 300,000. You have to add the net income they give you, subtract off what he withdrew, and that's your capital balance for the end of the year that you would put in your balance sheet. Okay? Take the balance they give you, plus net income, minus his withdrawal. And that will give you the end of the year capital balance. And that's what you'll put in your spread, in your balance sheet. There are some other things in there. There's one called deferred income tax. Deferred income tax can go 4 different places. It can be either an asset or a liability, current or long-term, but they have to tell you where to put it. So you have deferred income tax in this one. It says non-current credit balance. So where would it go? Credit balance makes it a what?
Liability and it's long term.
Correct. Okay. So they have to tell you what to do with it. All right. They have to tell you whether it's current, long-term, debit balance makes it an asset, credit balance makes it a liability. Okay. All right. Got a little bit of work to do. It's mostly just about the formatting. You should be good. Shouldn't take you more than a couple hours between now and Friday to get everything done. Okay?
One quick question.
Yes, ma'am.
Is problem 5 is the homework problem, and it says to prepare the balance sheet in accordance with the USALI. So the daytime cafe one you were just showing us for problem 2, would that be the format to meet that?
So the format that I want you to use is the one like the Benjamin is, and that is on banking.
Oh, okay. Fair
Yeah,
enough.
It's
Thank
the
you.
same thing. Mine's a little more formatty, but it's better. Okay. All right, guys. I'm going to stop recording.